journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we're going to keep looking at this gold market here. As you can see, this was the ABCD from January the 22nd up to there, measured to 56.23. Now, remember, we were looking for markets that repeat over and over again. This was a $170 break, and that was exactly what we had here last night. There was still the 28th around midnight. You can see we went right up, stopped right at the 382. Now, you notice what happened when it breaks the 382? That tells you that the trend has changed. That's a $450 in gold, folks, straight down, and that's where the stopped right at the 382 of the low way back there in January that we already pointed out. Now, also, on the other side of the coin, we had silver. So let me come up here and bring the silver chart up, because we had a really nice pattern completing in silver that we talked about yesterday. There it was up there at 22. Well, I have it on I've got it on a better scale here. Hold on one second. I think it's right there. Yeah, no, that's the copper one. And then silver is right there. You see at 21, almost 21. The high was 21.75. It went a little bit higher and then broke all the way down here. And then we had a little bit of a bounce back. But let's get back here and keep looking at silver so we can see there's where we are so far today. Now let's see if silver did the same thing that gold did with the 382. Okay, we've learned from some of these things. So there was your number there, 21 and change, and it got to 21.75, and we had a big break. And look at the rally back, folks. This is a huge rally. I think we rallied back to the 61% retracement already. Yeah, we're there. We just made it just now. There's a 61% retracement in the silver. That's a good sign. So let's check and see. This is a big break. We went from 21, dropped $15. Okay, so let's go back and take a look at this, because this is how you learn how to do some of these things. I try to teach it, but most people are just too darn lazy to want to learn it. We know two things. One, markets repeat, and they are predictable within limits. Andrew Lowe promised us that, and he did his book of 500 pages with all those formulas that look like Albert Einstein would have a hard time taking that course. But anyway, we do know they repeat. So look, the last time we had a big break in silver, where it went from 117 down to right here at even, that was a $17 break. What was this one? This was a $17 break. All right. Now this one, and you can see we rallied back pretty good. The key is, what is this one going to be as far as a low? So we need to go to the 4-hour chart now. Okay, the reason why I'm telling you this, folks, I ain't going to be around forever, so maybe some of you will remember some of this stuff as we go through. But okay, now you can see that's a major low right in here. See how these are equal? That's a major low. See, this market's not over yet. It couldn't be. I mean, I think it is, but it doesn't necessarily have to be. So what we want to do is to find out if this low here was related to another low that we had back here. Now I'm just looking at this one, eyeballing it to see. I don't think it's this big one right here, because that just seems it's too far away, but let's just double check it just for kicks and giggles. No, it didn't do that one. So it's probably the 382 off of this one right here. So if you move it over and put it in, and there it is exactly right at the 382. These are the cycle things that Stan Harley talks about all the time. These cycle lows and cycle highs. All he does, well, he does a lot of things because he's so damn good at it. But anyway, that's what we're looking at, is just the simple things of what we're watching right here. Now, you remember when we had this $17 break right here, all right, we want to see if that was a 382 off of something. So we have a lower low right here. And if you put that one in, there it is right there. You see how the cycle is repeating itself? And that's all we're doing when we do these things, folks, is try to give you an edge. You're using some of these patterns that lock out. Do they always work like this? Get out of here. Heck no, none of them do. But, well, sometimes they do, but not too often. We did have another one that was quite exciting yesterday. Also, we did this during the program yesterday. We're going to do it again because where did I put the darn thing? That's the problem here. Well, that's that one. There it is. There's the NASDAQ. We had that 1.618. This was the huge ABCD coming off of the January 16th low. And we went right up to the 1.618 at 23.42. And guess what the low was today, folks? This one you won't believe either. You see that 382 right there? That doesn't mean anything. But let me show you what did happen. We'll come up here, quickly grab this. Well, I don't know how quickly it'll be, but there it is right here. And we'll move this over, and you'll put it in. And remember that 382 I was telling you about? Okay. There's the 382 I was telling you about right there. You know what that is? That's the exact 61% retracement of that low to the tick. And you can see we've had a huge rally of 200 and, 300 points. We've rallied the NASDAQ 300 points from that level right there. So, and then we had a little bit of a move here. Let's see. We got a shot here. This telling you it might be bullish here because look what's happened. This is only 13 minutes, but this is your first key. We came down and all we could do was stop right there. So if we get any strength at all now in here, we're off to the races. So this is the rate. There's your pullback right here. That's telling you that's where you want to be playing. But there was your exact 61% retracement. And you say, well, that doesn't mean very much. Well, it does because we have a whole bunch of indexes, one of them which is the Dow Jones Industrial Average. Let's see what the Dow Jones was doing at that time. Okay, there's the Dow Jones. I've already did the work for you. All right, there's your ABCD from yesterday. It stopped right there. You see that? 48725. Look at the 786 right there. Boom, what does it do? It rallied right up to the 382. So we're in a ballpark now. We're either going to get ready to knock it out of the park to the upside, or we're going to go into the bleachers and maybe make 3 outs. Who knows? Anyway, that's what I'm watching as I look at these things every day. That's the small edge that I have, and that's really what I do. Now, I know I have the reason why I'm giving you all this stuff and repeating it over and over again is I have people that complain today because I, in fact, didn't say to sell it there in the gold and in the silver. I mean, I don't know what I have to do. I guess I should put the orders in for them. That's neither here nor there, but the question they had, well, this doesn't work on stocks. Well, let's just take a look. What's the big stock today that's got all the press? Meta. So let's take a look at Meta. Very, very bullish. And what do we believe in when we do these things? We believe in a little thing called the old alphabet soup called AB equals CD. Okay, so we're going to take a look at it right here. And there's our AB equals CD today. It measured to basically 730. They were trading right there at 730. The high has been 744. And that's all it's done. It's actually holding up pretty good. It's very bullish news. It's a big move up to the upside, so that's holding relatively well. Okay, so that's one of the ones that we did. We have a couple others here, but I've got to take a break, and then we'll be back right after the break. So stay tuned, please.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, folks, we're going to take a look at the Russell. You can see the ABCD pattern measured to 26.21. And remember, strong down, you have to make a 127 of the ABCD leg, and that measured right to there. And we've had a little bit of a rally. You know, it didn't even get close to the 382. The Dow Jones made it to the 382, but the Russell is very bearish. It didn't do too much. Now we're going to take a look here at Microsoft. This is the one that, hold on a second here. John's giving me some information here on standard deviation. Hold a second here. And we'll move this up here. There's where we are here with Microsoft. There was the 382 was yesterday, and then the news came out. The report was very bad, and the market broke quite a bit. But let's just take a look at it. If we go and look at it on a smaller time frame, because you can see the break. See, there was your early morning break. Okay, there's where the 29th, this is where the market opened right here. See, there was your opening range right there at 9:30. Okay, so there was your overnight, and then it started to come down pretty hard. And all we did, let's just plan, just bear with me here just a second so I can show you, the structure of how the market moved. Okay, now once we had this break started like this, that means that we had a big ABCD that was going to measure down here somewhere, okay? And there's where it measured to, right there, the low of the day there, where it's trading at 423. Is that hard to do or anything? I don't think that it is. Then here's the opening range right here. We had a little bit of a rally here. You see it went to the 50% level. Then we make the lower low, and you match this to this one. And where does that take you? Right on the open, it's almost exactly at the 382, and we don't get there. And John is showing me something about here. I should show. He's so darn smart. Let's just take a look what John's showing us here. Okay, this John Jameson, folks, out of Isle of Man. He does some really great work with statistics, and he's going to show us here what he was. We were doing this ahead of time, so he's just showing us again. But there's let's get right up here. Oh, shucks. There it is. on the weekly chart last night when we were up at that level, that was 3 standard deviations. Then we broke down to 1 standard deviation and up to the 2nd standard deviation. But when you had all these things there with the ABCD and volume going, 15 times normal, then, and you were setting at, all those numbers, and it's 10% up, and it's only the 3rd time in the history of gold trading that it's been up 10% in one day. That's a big deal. Anyway, that's what's happening, but we're going to find out where it goes from here. So let's move on here and take a look. We've finished that. Now we've had a big ABCD. That's look where it stopped. There's your 1.618. Boy, it hasn't moved at all, but that's what we're watching. Okay, so we're done with that one. Okay, and we're done with this one. I'm trying to cover a bunch of these so that we can see some of the things that we're looking at as we walk these things through here, each part of the day. Okay, now let's get up here. I talked about Meta already, I believe. Did I do that? Yes, I did. I talked to Meta. In fact, it's doing pretty good now. See, Meta is back getting pretty strong. At the high of the day is 44. In fact, it had a pretty big break here. Watch. After it hit the high, well, pretty big break. Let's just see if this stuff really works. Let's see if that's no, that's not a 382 at all. There was the opening gap, and then it backed off right here to 10, and that's not even close to what that low was. So this looks like it's probably going to go higher, but it's leading the pack, and we're done with that. I don't need to look at it. I'm just trying to show you the numbers, see if there was a big move from there. That doesn't even come close to the, it comes within $5, but that's $700 stock, who knows. Okay, let's get out of Dodge here. We've already covered the stuff we're looking at in the gold market. Let's move over here to crude oil for just a second. Okay, here's the crude oil. Now I'm going to get this up here and bring it here to just a second. Here's we are. All I'm going to do now, this was the forecasted high. I'm going to go back to the hourly chart on this, folks, because we had some big numbers coming up in here. You'll see, move this over right here at 65.11, and it held for about an hour or two, and then it popped up and went up to 66.40. Now, if you did this type of trade, you're going to lose, and the reason why is it just doesn't work. Okay, because there's the number that you're looking at, all right? And it went higher than that, so there's not anything. You just have to do the trade, and, it worked for a little bit, maybe $400 or $500, but then it took off, and boom, away it went. As it was going up, now this is the hourly chart. Let's just go through and see if the things that we talk about are really important. So here's our first move right here off the bottom, and you come right up, and we stop right just a little below the 382 right there. Then we have another run up and the market backs off again. Let's see what it does there. From your low up to your high right there, what does it do? It stops almost exactly at the 382. Then it just takes off and runs, and it doesn't, look back at all. So that's the main thing. So this is the problem. Well, sometimes these things just don't work. I don't have to make excuses for it, but that's what's happening with it. So those are the main ones. Now let's switch over here for just a second now, and we'll talk here about the currencies because they're important to us too. Now you can see here we've had that big move in the euro. Now it's starting to back and fill a little bit. We'll do the dollar index, all of them, but we're going to watch the same thing because we've had a heck of a run here. All right, now we had a big move down from 120 down to 120. That's a little over $1,600, okay? Now that's a pretty big move because it's the biggest drop that we've had. Now you have to go back to your lowest spot that was back here on January the 19th. That's your lowest spot on the chart. And you ask yourself the question, is that going to be a 382 from yesterday? We already know the answer to that because we were on the show yesterday telling you that it misses it by, 7 pips. Boy, that's pretty close, folks. That's almost spot on here. And then we had a little rally. All right. Now the rally is all the rally's done is just rallied back 50%. Now we've come down. We're still moving lower. So we've got a correction coming here now in the euro. And this is going to be a big one because we want to do the hourly. And the reason why is because that dollar index is under a great deal of pressure. So there's the move that we're looking at to come down. So we're just going to come over here, take our low from that's a good a spot as any because that was the bottom of an ABCD. Okay, that's going to tell us we're probably going to come right to here because there's going to be you can see the ABCD right there, ABCD right there. So we're going to do the same thing. We're going to come over here. Whoopsie daisy, spin it around. Okay, there it is right there. And there we come down to 1824. So we get it down about another point or so in the euro, and that's going to be a real interesting because this will be the biggest correction, 3-day correction, possibly 27th, 28th, 29th, 30th is Friday. So it'll probably be a Friday. We'll be watching that one very, very closely here. There was your ABCD pattern right here. That was back on the 21st, and boy, that one took off. Let's just move over that. Oh, there you go. There's another. Looks like that was a 382 also. Let's just take a look at. We remember this was the big ABCD right there. Yes, it was. Hold on just a second. Yeah, there it is right there. It was 50%, 382, just a little above it. So there's your ABCD, and then away she went, and there's how it measured up to these spots. So that's what we're looking at. So let's take a break, and we're going to cover the British pound here next, and then also the Japanese yen. So bear with us.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, this is the dollar yen. The dollar is going short. The yen is going long. As you can see here from this level, that we're expecting to be some pretty strong support here at the 151 level. That's coming down from 159. That's a big move, folks. Fortunately, it had some really nice patterns up there that made it look like it was going to come down with that beautiful butterfly that was setting up there, right there. There it is, right? We're looking on the daily because that's where we were watching it there. Oh, I erased it. Sorry about that. You'll see it right here. There's your ABCD pattern coming in right there, and there's your expansion. And then there's the area where you want to be looking at 159 and change, and down it came. So we move this over. We got to watch this one again, just doing the same thing like we were doing with the gold and the silver, because we have a big break like this. Okay, now remember we had a big break here in the Japanese yen right here, correct? So all we're going to do now is we're going to mark that over and bring it over here and see how close it came to being the same. It's off by quite a bit, I think, so you can't really do anything about that, but it stopped here. So let's do the same thing like we did with the gold and go back to our big low that we had way back here in April, because you can see that is the lowest low. And I'm just eyeballing this to see if it's going to be, what is that, folks? Is that correct? It was a 382 yesterday and today, 2 days in a row. It's hit the exact 382. Boy, that sure tells you something. Okay. All righty. Okay. The odd, John just mathematically told us the odds of it, gold going on 3 standard deviations was 3,500 to 1. That was the 335 to 1 was the odds of the going up from that level. All we were doing, folks, on that gold was looking at the ABCD. There were 2 of them there, of course, and then the fact that it was record. That's only the 3rd time in history that it had been up 10%. I was involved in the gold back in 1980, folks, and this was totally different. In 1980, it was a just a second, I got to tell him I'm on the show because he's bothering me. He doesn't know. He doesn't remember the time. Okay, but in 1980, gold would go limit up, $50 limit, and silver would go up. I think the limit on silver was 50 cents, and it was trading around 54.50. Actually, silver was trading at 3,600 because there was just no buying up there, and it does, Johnny. I love you. So yeah. Yeah, it's very good. All right. Anyway, this is all about numbers, the stuff that we do. You know, all these are numbers that are in there that just they're very important, and they do not work all the time, but they work better than 65% of the time. That's what that Floor Trader Handbook is about. We went through all those statistics and showed you, yes. The good thing about it is you don't have long strings of losses. You might have 2 or 3. I think on one time on one of those things we had 7, and then right after that had 9 or 10 wins in a row. So it all averages out, but you are going to have periods where it just doesn't work. And that because I'm not infallible. I make all kinds of mistakes. But if you just follow what you're supposed to do and do your homework, you're going to be just fine, because that's the key to watching. And you've got to believe in these numbers, because just to look at this right here. There's your low right here. All right. Where does it go to? There's your 50%. See how it goes below the 382, stops right at 50%. There it is again. And now we're starting down. We go below here, folks. This is going to be, because we're here 2 days in a row, hasn't done anything. So we get below here, this is going to be really, you want to get short if it gets below this 151.70 level or something like that, down another 130 handles. So that's the way you add to your position. So that's what we're watching there. Now let's take a quick look here at the British pound. And then I'll do some grain stuff in just a minute because I had several people asking about the grains. Hold on a second. I'm always interested in them, but I'm just got the chain on my bicycle's got it wrapped around my neck, and I'm just trying to get through all these currencies here that we can. So there's our British pound coming in right now. It also made a big correction, if you remember, up there. Now we've been here 3 days in a row. See that? There's your ABCD. So it's been here 3 days in a row. This might not be the top because it hasn't broken enough to really do very much. If we look at this on the hourly basis, you'll see it's almost nothing. Look at that. That's nothing. That's a nothing burger. And just look at that. That's not a 382 or anything at that spot. There's not anything there that would even there's a pretty good correction here. See the length of that time took almost a full day to complete that. So that would be one, but I can tell you that's right at the exact 61% retracement right here, as I recall. Yeah, there it is. It stops right at the 61. So it's holding up. Now there's your ABCD. Now it's bullish as long as you don't get below here. If you get below here, then you start down, and you've got this big low that's very important. All you want to do is you want to go back and mark it right here. Say your next level of support is going to be right there at the 382, which would be right there, okay? And what would that be? If you would took from your low right back here, well, either one of these is fine. Draw your ABCD in, and where does it come into? Right at the 382. See how the numbers start to fit together? And that's what you try to get, is that repetition and also the possibility that it does repeat. Well, repetition and it is predictable within limits. Those are the two things that Andrew Lowe looked at. I've been asked to take a look at the Australian dollar here. We got another break coming up. Boy, time goes fast when you're having fun, doesn't it? Hold on. And this is fun for me. Hold on just a second. I'm finally knocking this cold out of the air. Oh, look at this flagpole we got here. Shut the front door and raise the rent. We might have something good here, boys and girls. Okay, this is the big wide range like this today. This is a big range. Wow, that's a big range. 1.5 in the euro. That's Australian dollar. That's big. So there was a 382 off of the bottom. We already told you about that. That's been the reason. Look, there was your second 382, and boom, here's where we are now. So let's measure to see, just like we did in the gold. All right. Well, let's just measure to see if that measured to that spot. I can see it's way. It doesn't do it at all, but we have to make the extension because the CD leg is so very big. Okay, it doesn't miss it, but because we have this gap right here, we got to increase this by 1.27. Hold on. I'm pointing with my finger like you can see it. Hold on 1 second. Boy, old age is really fun. Okay, there you go, right up here, and there it is, right, 107.05, and the high was 107, so it missed it by 5 pips, which is spot on. So this is pretty much a pretty good top in here for the Australian dollar, at least right now, but it hasn't backed off hardly at all. Whoa, sorry about that. It did make a big ABCD. I didn't even see that. Holy cow. Shut the front door and raise the rent. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, we're going to switch gears here for just a second because I've got a lot of heat about this trade that I recommended that I don't have anything. Hold on a second. We'll get it up here. This is the NASDAQ, that I've been watching for quite a bit. But the trade that I thought was the best trade out there on the board was the as you can see here, this was the Bitcoin. There's your 382 off of 126 to the exact tick. And look where we are now, folks. We're getting ready to break down. That means we got a big ABCD coming down here. So we're going to go from 126 down to 26. That's 46 points. Put 46 onto that, folks. You're looking at Bitcoin at roughly 55,000, folks. That's what that measures to. A, B, C, D. That's why it looked. This took 6 weeks, folks, to make that ABCD, and it did it perfectly with a perfect ABCD. That's why. And then today you can see it's quite a bit. That's why I'm looking at these things to tell you that you're watching some of these things that are very interesting. But it's very bearish in that particular one as we look at it. So let's get back over here. And we want to make one little change here for a second, and we'll be right back here. I'm trying to find that doggone, where is it? Shut the front door and the silver. There's where we are. I wanted to see the rally back in the silver because we had a pretty good rally back in the gold. The silver still coming back good. Remember, we already talked about that. It looks pretty good. It's had a big correction, just completed the pattern, and that's all it's done. It stopped at the 382, and it's rallied back. In fact, it's rallied back above the 786. Look at this on an hourly basis, and I think we just go a little bit above the 618, so it hasn't really done too much. The good part is, folks, even though we had these big breaks in a market that's gone this far, that's really not very much, and it's repeated itself over and over again. That's what I'm trying to explain, that, watch for that repetition. You can't tell what's going to happen in the future, but you can guess where, sophisticated guess to where it's supposed to be based on what it's done in the past, and that's what it's all about. That's where repetition is the mother of knowledge. Okay, let's move on here to the next one. Tesla. We've had a question about Tesla. We'll bring this up here and take a quick look at it here. And there's where we are with Tesla. Come up here. See, Tesla, we had a 382 rally here the other day. Now, the news started out pretty good on Tesla this morning, but it rallied. It was up about 12 at one time. Now you can see it sold off. Let's look at this on a intraday 60-minute, and you'll see what I mean here. Yeah, see, we had this early morning pop right here, got up to 40, and then it went from 40 down to 18, making a new low. That's telling us that we're probably heading lower in Tesla, because there was our 382 we talked about just the other day on the 23rd, and there was another 382, and now we're starting to drift lower. So that's another one that tells us that it's heading down towards the promised land. This is what it looks like from where we stand here looking at these things right now. Okay, now let's move over here to this Dow Jones for a second, because we had a little bit of a burp in the Dow Jones, but you see it never got any higher than the 38%. That and the Russell are both telling you that these things are acting very bearish, folks. Now, we're still getting reaction pretty good in the S&P. It's got as high as 68, and now it's backing off just a little bit also from that level. It should be having a little bit of a rally in here based on the early morning stuff here to look at, but whether it's going to continue or not, we have to wait and see. But there's your 50% retracement off the bottom, and it says that we're going to close mezzo somewhere up in this area right here. So that's what we want to be paying attention to here as we're watching these things here unfold. Now, let's get over to take a look at the soybean market. Okay, we'll take a look here at the March soybeans, and we'll take a look at the cattle. And we'll do soybeans first here, and here are the beans. We'll get this up here. See if the Chinese are going to be coming in buying like they say they're going to. There's our move here. We've been in a real tight range here in beans here over the last few days, folks, from 190 down to 50-cent range. We had to move here, the little bit of a pullback, and then the rally back up. It's actually doing pretty good. Let's look at this on the hourly basis, because it's still in an uptrend. There was your 382 back here on February, or on the 26th. Okay, the market went up and made a new high today, so you have to recalculate the 382. Watch these beans, folks, because they got a chance. There's your low right here, all right? And then you move up. The new 382 is going to be right about here. So watch these beans here, about another nickel lower. That could be really good support. You don't have to risk much there, because if you're going to buy this, it's also the 61% retracement of this one. So you got a double reason to say that if it doesn't hold that level, which is this level right here, there's your 61, there's your 382. So you only have to risk about a nickel. So that's a good way to play it. But there's your big 382. You made a higher high, so it's still moving good. So try to find a place to buy it. Look at the correction here. The last correction we had did that. So let's just measure to see if that's going to do the same thing that it just did. There it is right there. Where does it take you down to? Just about that same number we want to be looking at. There's nothing wrong with that to be a buyer there, because you're in this very strong uptrend. And if you just looked at parallel, well, that doesn't draw it very well there. Let's try to do it the right way. If you were doing a parallel channel like this and just clone it, like I can. Let's move that over like that. You see, you're right in that zone. That takes you right into that level right there. So that's why you have a good risk reward at that point right here. I've seen a lot worse trades than that, but that's not pretty good. You just don't have a good ABCD here on the downside. So that's the main one that we're watching as we look at these things unfolding. Now they're beating this Dow Jones up again, so we're getting ready to go lower probably in some of these other things here. So, okay, let's get that out of the way, and I think that's the main thing we got. One other question someone had about wheat. So let's get the wheat up here, and I wasn't prepared for wheat, but they did ask about it, so I will talk. There's your March wheat, and that's been pretty strong, and it's still, we made an ABCD here in the wheat. I can see that just looking at it here today. There's your ABCD. Let's just see if the ABCD was working today. There's your AB right here. AB. Move that up to CD, and there it is. Right right there. Whether you want to go short wheat, folks, there's your spot, 445. The high today has been 443. So if you sell it at 445, you only have to risk a nickel, and your minimum profit would be 12 cents. So you're risking a nickel to make 12 cents. You're expecting it to repeat, to do what it just did here right before. See, you go to 55 and then right back down to that level there. That gives you pretty good odds on the wheat. So hopefully that helps you. Looking at things that we're watching. 38. Oh, we got Apple earnings today. We might as well do Apple because everybody will be watching. That'll be the number one thing on the thing. Now, this is important about Apple, folks, because we had that big number down here. Now, you see, all Apple did is make a 382. We got earnings coming out in Apple today, so that's going to be the big daddy rabbit. So stay tuned, and we'll be right with you.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
All right, folks, I've been doing this for a long time, 62 years, and this is as good as it gets. This is the New York Stock Exchange monthly chart. I hardly ever look at monthlies, but this is so clear that it's unbelievable. You got 3 ABCD patterns. You got this really large one here, then you got the smaller one, and then you got this little one right here. That's this one. Remember that wedge pattern that we were looking at? Uh-oh, does someone's calling me. Uh-oh, something's wrong. Oh, you can't see the chart. That's the problem. Shut the front door and raise the rent. Doggone it. My problem. Doggone it. Thanks, Al, for reminding me. Okay, there's where we are. There's the wedge pattern that we looked at before. And that's why this is getting ready to really take a flying Melinda to the downside. The action that we're seeing today may or may not be the reason. We've had some good responses to other things and bad responses to another. You don't really know, but at least it's beginning to show that all this measures to 22,800, and so far the high has been 22,890. That was made 5 days ago, and it hasn't moved anywhere in 5 days. I mean, it stayed right there. You can see it right there. See that number right there? It's been there all that time. So that's why it's so very, very interesting that we've been here at this level. So just be really careful now, folks, because we live in interesting times. To see the gold move, $10,000 in a matter of, it is $10,000 with 500 up, 500 down. It's a big move, and it might not even be over because it stopped right where it should have. So that number is at 5,090 in the April gold. If we get below that, then the trend has changed, and we are going to go down quite a bit from that level. So those are the ones we're watching. So live every day in an attitude of gratitude, and may God bless, and we'll see you on the flip side tomorrow.